Banks versus NBFC. We shall discuss them today. Starting with NBFC, it's a non-banking institution, but it works as a financial institution. Firstly, I would like to say that this is a non-banking company. The services which it provides are just identical to what services banks are providing, but they are non-banking financial institutions. They look alike bank. They work bank-like institutions, but provided they are not exactly banks. Those financial institutions which provide money related services to the people, to the general public. Money related services include the loans, investments, insurance. All these services NBFC will do it for you. The range of products of NBFC as compared to banks is wider. They have more products to offer, but the thing is that they are more risky as compared to banks. The risk involved in NBFC is higher. Banks are the financial institutions. The main thing is they are approved by the government. They have the government backup. They accept the deposits. They provide you the loan, ATM, credit card, checks, accounts, transfer from one account to the other account sitting by the convenience of your home. All these services are provided by banks. If we compare their services to NBFC, the product range is a little narrow, but banks are definitely more stable institutions. They are more secure institutions because they are government backed institutions. Now we compare NBFC and bank. Banks provide you the loan, of course, yes. Loans are also provided by NBFC. So if you want to have a loan for any XYZ reason, for your home loan, car loan, anything, you can approach either the bank or NBFC. Both these institutions will be happy to offer you loans. You want investment services, you have little savings with you and you want to invest in your shares and bonds, and you are a little confused, you want the investment services and the suggestions, you can go to the banks, you can go to the NBFCs. Both of them will be happy to help you in investment. Now you want foreign exchange service, you are going abroad, you want to convert rupees to dollars, or some relative has come from abroad, you want to convert dollar to rupee, vice versa, whatever. Banks will provide you this foreign exchange service. So will the NBFCs. You also provide you foreign exchange service. Conversion into any currency is possible with both these institutes. Now you want to buy an insurance policy. Banks are there to help you. So is NBFC there to help you for purchasing an insurance policy. Then comes the payment service. Transfer from one account your money to your parents' account, to your children's account, from one account to another. You want to pay your electricity bill, any bill through bank, possible. Banks will help you in doing all these payment services. NBFC will also help you do all these payment services. Now another similarity, you want wealth management advisory services. Now you have a little money with you and you want to invest. Now the question rises, where do you want to invest? How will you manage your wealth? The advices, you want suggestions. You can go to banks, you can go to NBFC, one and the same thing. So in these slides we see there are certain services which banks are giving you, and so NBFC is also giving you. Okay, now we come to time deposit. Time deposit means supposingly you have 1 lakh cash, you want to go and deposit it with the bank and fix it with a certain period of time. You will not be taking the money back. Say you want to fix it for 2 years. So 1 lakh cash you'll give to the banks and you will not touch that money for 2 years. After 2 years you will get that money back with an interest rate also, right? So that is called time deposit. Time deposit can be done for 2 years, 3 years, 4 years. That is up to you, up to your choice. What amount you want to invest and for how long, that is up to the customer. So banks will readily provide you time deposit and provide you interest on that time deposit. NBFC will also do the same. If you want to fix your money for a certain time period, you can either go to banks, you can either go to NBFCs, one and the same thing. Now comes the main point. Another point is demand deposit. Demand deposit is not the same as time deposit. Demand deposit means supposingly you have 1 lakh rupees and you go and deposit it in the bank. and you need it after 1 hour, you need it in the evening, or you need it the very next day, so you can immediately go to the bank and withdraw your money. That 1 lakh is not fixed for a certain period of time as it was fixed in the time deposit. In time deposit, you are supposed not to touch your money for a period of 2 years if it is fixed for 2 years time. But demand deposits, it is up to the willingness, desire, demand of the customer. Whenever the customer wants his money back, he can immediately go to the bank and withdraw the money. Such a thing is called demand deposit. Now, do banks accept demand deposit? Yes, they do. Do NBFC accept demand deposit? No, they don't. So, demand deposit is a special feature which is provided to you only by the bank. It is not provided to you by NBFC, because there is something called banking license which is issued by the RBI. Until and unless you have that banking license, you cannot issue demand deposits, and that banking license is of course available with the banks and not available with the NBFC. So NBFC will not offer you demand deposits. Time deposits mein to money is fixed for a certain time period. It can be of your choice, 5 years, 6 years, whatever. You will get higher rate of interest in time deposit. Demand deposit, you will get lower rate of interest, because any time you have the facility to go and withdraw your money. Now, demand deposit, the depositor can withdraw whenever he wants at any point of time, and there is no need to give a prior notice to the bank also that I need this much cash. I had deposited 1 lakh, I need 10,000 today in an hour. No such notice is required. Anytime, it's your willingness, it's your desire, your wish, you go and immediately you can get your money. So no need to priorly intimate the bank about your withdrawal. Now though, you even can sit at home and withdraw your money. Internet banking is there, ATM is there. So this is a special feature of demand deposit. Only banks are allowed to cater to demand deposits. Why? Because the demand for money in the case of demand deposits is highly unpredictable. You don't know how many customers will come demanding for their money. Maybe they don't turn up, maybe 50% turn up, maybe 100% turn up, whatever. It's very unpredictable. You cannot guess the money right. So the institution who is eligible to hold and demand deposits, they have to maintain high liquidity. You have to maintain that cash. What if people come up and you don't have cash? You will land into deep trouble. So you have to maintain high liquidity, because you have to meet the withdrawal requests. Now, the question is, if all the services of banks and NBFC are identical, just as we saw in the previous slides, only demand deposit, I told you there is a different feature. Their demand deposit is a difference between these two institutions. Now the question arises, why do we even need NBFC when everything is same? The answer is that NBFCs, they understand the customer a little better than the banks. Banks are more rigid. They have their own rules. They cannot come out of their rules. They cannot be flexible. NBFCs are flexible. They can customize the service according to the needs of the customer. NBFC are able to adapt themselves to the customer requirements. NBFC provide customer oriented services. They are very flexible. It is easier to reach out to NBFC as compared to the banks. Now for general public, it is easy to go to NBFC, get the rules a little bit extended, little bit changed, little bit flexibility is provided to you in the rules. So people find NBFC a little more comfortable. Banks provide home loan, business loan, car loan, bike loan. You all know. We have been studying it since childhood. Banks do all this for you. Now the question is, do banks give pizza loan in case you want to eat a pizza? Banks will not give you loans for such petty issues, but NBFC is there for your rescue. NBFC will give you loan for such petty issues as well. How come they do that? They have tie-up with so many apps these days. Whenever you do online shopping, you must have come across easy EMI. Even if you want an outfit or a dress for yourself, supposedly it is of 3,000 rupees, they offer you this chota chota karke, it's written there in small words, easy EMI available. What is that? This is the app has the tie-up with NBFC. They'll connect you to the NBFC and then you will get easy EMIs. So what is this? This is the role of NBFC comes here. And you also get 30-day interest free option. All these things are provided there these days, internet. So all this is for NBFC. I mean to say NBFC gives you loan for petty issues as well. For such small miscellaneous items, banks will not provide you loans. But many a time what happens is NBFC, just in order to attract the customers, they give higher rate for time deposits, for the fixed deposits, and then later it's very difficult to fulfill the commitment of such higher interest rate and they land into trouble. Why are they landing into trouble? The answer is there is no government backup for NBFCs. There is no security which the government provides for the NBFCs, whereas Government provides security to the banks. Now, if you talk in the tabularized form, the difference, the meaning, NBFC is a company which provides bank-alike services to the customers, but it does not have any banking license. Bank is a bank. It's a government authorized institution that provides banking service to the public. The main thing is government is there. Regulations, there RBI is regulating NBFC, RBI Act 1934, there is Companies Act 1956, but NBFC need not to follow the same regulations as banks. NBFCs are more flexible, less rigid in their operations. But again, government is protecting the banks. Government is not protecting NBFCs at all. Now for Banking Regulation Act 1949 is there, RBI Act 1934 is there. The regulations for the banks, they are more strict. They cannot provide customer oriented services. They cannot customize their rigidity rules. They are not flexible. Deposits. Demand deposits cannot be accepted by NBFC, is not allowed. Banks can accept demand deposits, can accept deposits as usual, and they can further issue them as loans. If you talk about the capital requirements, you must be aware there is CRR, CSR, SLR. We've made separate videos on these ratios. You can please go and look at, have them. Now the banks, it's compulsory to maintain these ratios. RBI asks them that you have to maintain. What does this mean? Supposing 100 rupee you go and deposit in the bank. Bank cannot issue this 100 rupee as loan. It has to have, say, 20% CRR is there. So 20 rupees it will keep in its safe and 80 rupees it will offer as loan. So that 20 it has to keep it because RBI has asked to keep it. Supposingly somebody else comes to withdraw the money, so how will the bank have the liquidity? In order to maintain that liquidity system, in order to obey RBI, in order to have this these ratios maintenance, it cannot issue 100 rupee as 100 rupee loan. It has to keep 20 rupees as the backup. They have to keep money as reserve. So what does they end up to? This reduces their lending capacity. They have to maintain certain ratios. But for NBFC, no need to maintain any ratio. They can go whatever they want to do. Next, products and services. NBFC provide more services than bank. They provide customer oriented service. They can customize their rigid rules. There is lot of flexibility. Savings and investment plans are there. Insurance, mutual fund. Now, NBFC even provides loans to those people whom banks refuse to offer loan, because NBFC offer derivative and structured products. So if you are refused by a bank anytime, you can approach NBFC and they will be happy to help you with the loan facility. Bank provides loan facility. It provides guarantees, credit card facility, remittance of funds, check facility. All these facilities, they are provided by the banks. As far as risk is concerned, I have already told you NBFCs are considered more risky. There is no protection from the government. NBFC has more chances to fail. Risk is covered by the government. NBFC has been restricted for those areas where risk is involved. Risky ventures are given to the banks because if something untoward happens, government is there to protect them. Now government guarantee, there is no government guarantee in NBFC. If NBFC fails, the depositors will not get anything. But there is government guarantee up to a limit in case of banks. If the bank goes bankrupt, the depositors, the creditors, they will get guarantee up to 5 lakh. Supposedly you had 10 lakh rupees with the bank and the bank fails. Now your 10 lakh will not die. 5 lakh will be provided to you by the government. So this is the guarantee by the RBI. Up to 5 lakhs the government backs all the banks. Now as we consider the license, it's comparatively easier to get a NBFC license, but it is very difficult to get a banking license. So here I come to the end of the article. I hope I have made the things clear to you. In case you have any doubts, please ask in the comment section. In case you have any suggestions for me, please write down in the comment section. Thank you for watching. Like, share and subscribe my channel. Stay safe, stay blessed.